Oh boy, it's time. Get excited. Or not. It's a free country. It's time for Game Trader Live. I'm your host, Asif Khan. I'm CEO, Editor in Chief, EIEIO here at Shack News. That stands for Extremely Intelligent Extreme Intelligence Officer. In a time of AI, I have created EI to make line go up. And boy, howdy, are lines going all over the place in the stock market. We're going to talk about a few things today. I'm running on fumes, by the way, folks. If you're in the chat, send me your energy, because I am functioning on 3 hours of sleep right now. We had late breaking news in the Nintendo world last night, and then we had Pokemon news this morning, and I was on both sides of that Shack News barbell. Shack News barbell. But yeah, got a lot of interesting stories this week, though, so I'm kind of queuing them up so we can talk about them. NVIDIA reported earnings earlier this week. Maybe you saw it on stream. Samsung dropped their new Galaxy S26 smartphones. OpenAI actually just closed a funding round, and yeah, all sorts of good stuff. I have some clips that I can pull up on the Twitter, I guess. I don't know. Not entirely sure where we're gonna go, honestly. I had a plan. Like last night, someone asked me, "Oh, what are you gonna do on Game Trader?" I was like, "Oh, I have an idea." And then Nintendo's like, "No, you don't." So I guess we can start with Nintendo, since that seems to be the only reason you folks are even here, is to hear what I think about Nintendo. But yeah, I'll get into that here shortly, and then we'll kind of go from
We
there.
have now.
Sorry, I was trying to queue up something and I failed. How about we pull up the chart, right? Bam. Here's Nintendo's chart. Things are. It's been rough chuckles for the Nintendo shareholders of the world. Um, hey there, Alicia Simmons over there on Facebook. Thanks for tuning in. But yeah, we're gonna take a look at Nintendo's stock chart. It's been rough. The stock peaked. It hit an all-time high. Right, we had an all-time high of $24.92 here on the Nintendo NTDOY ADR, and we hit a low a few weeks ago of 1347. So we got an interesting setup here, just on the technicals, and then I'm going to talk about the fundamental setup also, because I think there's something interesting happening at Nintendo. So you've had a series of narratives. You had a narrative that Nintendo is doomed. AI is going to replace all video game companies. You also had this narrative that the RAM prices were going to cause Nintendo and only Nintendo to have to raise prices. But in reality, there's got to be somewhere in between here. It's like the stock may have been overpriced at $24. I just internally at my own investment company, when asked what we should do with the stock, I described it as kind of ahead of schedule when it was above 24. And I also mentioned, because we adhere to the strat here, that it was at the top end of this broadening formation. And this has proven to be a resistance point during the entire Nintendo Switch uptrend. So this is an uptrend that began all the way back in 2013, 2014. And every single time it's gotten even remotely close to this, it has sold off. And most times it sells off pretty aggressively. This is the most vicious sell-off I've ever seen in the history of this stock. We're talking about down 43% from the all-time high right now. And it's down something like 15% year to date from January to where we are right now. It's February 27th. The reason I do these shows at the end of the month is that I can look at different time frames on the chart. And I try to look for a couple things: equilibrium or breaks of equilibrium in price. At this point in the show, we are not talking about fundamentals. I am just looking at bar charts, right? So here we are. This is the weekly chart. What I find interesting about this weekly chart is we had that capitulative moment the week that ended Friday, February 6th, where the stock traded 25.8 million shares that week. Had a huge sell-off. I believe it was the Thursday of that week. Thursday, February 5th, traded 8.5 million shares and went down as low as 1347. We have not hit that low since. We have not returned to that low. It has been inside of that week. So if you look at the weekly chart, you have an interesting situation here where the week that ended February 13th, which is my birthday, closed inside of that previous week's range. And then the week after, that ended February 20th, also closed inside of the previous week's range, and by definition, the week before its range. But what happened this week? We had an equilibrium break to the downside earlier in the week by 1 penny. That's all that matters. All it takes is 1 penny. 1 penny. So, that's a good question, Greg. But I'm going to talk about this outside bar real quick. We have an outside bar on the weekly chart, which means that the equilibrium has broken to both sides. That's very interesting to me because that means we have a new broadening formation to pay attention to. Because the strat, taught to me by Rob Smith, may he rest in peace, is based on the premise that the stock market trades and stocks trade in a series of uptrends and downtrends. They're not flat lines. There's not support levels and resistance levels that are horizontal lines. It's a series of uptrends and downtrends. So what's interesting here, when you have an outside bar, you have an instant uptrend and you have an instant downtrend. But what's very interesting about this is it barely broke to the bottom. It barely broke to the downside by 1 penny. And then it went back above it yesterday. It was at, I think, 1420 yesterday. So the last week's range was a low of 1364 and a high of 1414 or 1415 a share. So we broke both of those to the upside and the downside. The high of this week was 1444 and the low of this week was 1363. That's an outside bar. So now we have to watch next week. What happens with the price action next week? A break above the high of 1444 would be a buy signal on the weekly chart. And the way the time frame continuity works is you need the stock to stop going down on at least one time frame before it can stop going down on other time frames, especially longer time frames, right? So we finally have a sign, a tiny bit of evidence that this may have stopped going down. And just fundamentally, what happened this week? Oh, we actually got some good news out of Nintendo. How about that? Can you imagine? Good news? Nintendo? In this economy? Oddly enough, Donovan, I'm not even talking about that. That's what's funny here. What we got, this is why I'm so fucking tired right now. Late last night, Nintendo authorized a share buyback and is to offset a secondary offering. Banks and DNA are divesting of Nintendo shares, but Nintendo is buying back $650 million of stock. That represents about 1.2% of the float. They're going to take the amount of shares outstanding and decrease it by about 1.2%. That is bullish for the earnings per share, the net income per share of the company. Because if earnings is the numerator, the denominator is shares, you shrink the number of shares, that means the denominator is smaller, which means all things being equal, earnings are now going to be higher than they would have if they didn't do this buyback. Well, the thing I find really interesting about this is it's very shrewd on the part of Nintendo. Nintendo has done buybacks, but not very often. And what I think's really interesting about this buyback is they didn't do it when the stock was trading at 24. They didn't do it up here. They're doing it down 43%. And these companies selling it have to be kicking themselves. They could have sold Nintendo at 24. And now they're selling it down here below 14 a share or around 14 a share because the Japanese government is telling them we want to get rid of this cross-shareholding arrangements that you have. So, Nintendo and DNA have this relationship where they develop mobile games together and they each own each other's shares. The Japanese banks all own a bunch of Nintendo stock. And basically what's going on here is the Japanese government, the regulators in Japan, and the Tokyo Stock Exchange have told all these companies, get rid of these cross-shareholding arrangements because they're not friendly to international shareholders or individual shareholders in general. Because the Bank of Kyoto, for instance, owns 4.19% of the company. Mitsubishi UFJ through Nomura owns like 3.2% of the company. It's like hard for an actual shareholder to get their say when there's all these Japanese companies that own the stock. And I think that's what we're seeing here with not just Nintendo. You're seeing it with, I believe Reuters reported that Toyota is doing the same thing, but they're getting, there's a $17 billion sale of stock happening. So the amount of shares that are going to be floated here is somewhere around $1.9 billion of Nintendo stock, and Nintendo is only buying back about $650 million of that. So it's not like they're buying back everyone's shares. Some of those shares are going to be available on the market for either institutions, hedge funds, or individuals to buy. So it's a very strange story in that it's not just like, someone asked me last night, it's like, is this bullish? Is this bearish? And I was like, it's kind of complicated, but the net effect, I think, is going to be bullish. What was interesting is that the story broke first from Reuters, where they had the numbers early. They reported about the Bank of Kyoto and Mitsubishi UFJ. They did not report on DNA, and they didn't report on the I believe it's some other smaller firm that had a stake in Nintendo as well. But yeah, this was interesting in that the stock's down so much, and credit to Reuters, they got the numbers right. $1.9 billion of stock was being floated. They just didn't have all the people there. So it was at around, it was somewhere around like 2 in the morning, 1:30 in the morning that Reuters broke that news. And it was just a report, right? And then I had to come back in and I was like, oh, okay, well, this is no longer a report. I was about to go to bed because the Pokemon Presents was going on. And then the news actually broke. I have a Nintendo Investor Relations Twitter on my phone. And it broke at around probably 2:30 in the morning. That's before the Japanese stock market closed. So the financial firms were able to react and Nintendo was able to react. So here's what's going to happen. Nintendo, and this is the 7974, the shares that trade in Japan, not NTDOY. Nomura is selling 16 million shares. Bank of Kyoto is going to sell 10 million shares. DNA is selling 6 million shares. And Resina Bank is selling 548,000 shares. This will take place between March 9th and March 12th. And the interesting thing is Nintendo has also authorized up to 4.9 million shares to be sold in a secondary offering. Now, that would normally piss me off because that's dilution. But at the same time, they announced a buyback where they're going to buy back 14 million shares. So if they issue less than 5 million and they buy back 14 million, the net effect is they're getting rid of 9 million shares. But at the very least, they're getting rid of 14 million shares. And the net impact is going to be about a decrease of 1.2% of the float. of Nintendo shares. So what's interesting is the buyback is going to the buyback's going to occur next week from Tuesday to March. So we will be keep it locked on Shack News. We will be reporting on the completion of this buyback sometime early next week, middle of next week. But what's interesting is the buyback happens and then the secondary offering happens. So it's going to be really interesting to see how the stock responds to this, because this is going to occur over a couple of weeks, right? So it's something interesting to ask. We have a question in the chat from Surfaboy. It says, what's the reason a company might want to buy back their shares? Well, instead of asking me, why don't we just see what Nintendo said? Nintendo has resolved to repurchase its own shares with the aim of mitigating the impact of the secondary offering on supply and demand, as well as improving capital efficiency, and as part of its capital policy with agility in response to the changes in business environment and shareholder returns. So they're doing this for several reasons. It's one, that's a lot of shares that would be hitting the market all at once. So they're providing liquidity so that the market isn't like, oh my God, everyone's selling their Nintendo stock, sell the stock. So they are providing a cushion down here. But really, what I think's going on here, Sam, is that they think their stock's cheap. They wouldn't do this if they thought it was a bad idea. They wouldn't just buy they are a very frugal company. They don't like wasting money. And it's like, they're not doing this at 24 a share. They're doing this below, around 14 a share. They're doing it because it's cheap, but they're also doing it because there's a bunch of shares coming to market and they want to mitigate that flood. If everyone's selling all at once, you have these 32 million shares that are hitting the market in the next few weeks, they're providing liquidity. But I think they're also sending a signal. This is not, oh, these banks don't want to own Nintendo. That's not what's happening here. The government of Japan has said you need to divest from these cross-shareholding relationships because they're trying to make Japan as a stock market and as a broader market more appealing to individual shareholders and foreign institutions, be it hedge funds, mutual funds, activist investors. They want more investment from overseas and less of this kind of incestuous ownership of companies. And also, it'll allow for more shareholder voice to be heard. Because right now, some of the largest shareholders are these Japanese institutions, and they don't care. They're just going to sit there. Appealing to foreign investors is part of this, very much. And it's something that the Tokyo Stock Exchange has said. It's something that the Japanese regulators has said. So I think this is not. It's real easy to say, oh, well, these companies are selling this. Must be bad for Nintendo. It's not that. It's not that simple. So that's why last night, Sam, you were there when I was reporting this. It took me a while to comb through all these press releases because it is kind of counterintuitive. It's like, I'm like, why are they doing a secondary offering? Okay, they're doing it maybe to provide liquidity, but then they're going to buy back those shares. So it's all very strange. And then there's like these companies are selling, but Nintendo is buying. Nintendo isn't buying the entire float. They're selling, according to these press releases, they're selling 32 million shares in this secondary offering. The banks, DNA, and Nintendo, right? Nintendo's only buying 14 million of those shares. So that's less than half of what's going to be hitting the market. So it is important to note that. They're not going whole hog they're not buying all 32, right? That would have been somewhere around $1.9 billion. So they're only buying maybe $650 million. Nintendo has about 14, I think it's 12 to 14 billion dollars on their balance sheet right now. So I know a lot of shareholders on Twitter, which is currently called X, who have been clamoring for a buyback Because it's like, we all see it. I see it. I don't know if you follow me on social media or anywhere. I've been talking about how cheap the stock is, how I think this is an opportunity, especially ahead of catalysts like Donovan mentioned. The Mario movie's coming. You know? Like, this is... You have so many catalysts here. And the other thing I think is really interesting about Nintendo here is so many people are fixated on the hardware, right? It's like this thing. They're fixated on the hardware. But they've already shipped 19 million of those units. And you know, like by the end of this quarter, they will have probably shipped 19 million units based on their guidance. And they have capacity for like 25 million of them. But like, we're entering a phase in a launch of a console where they go from very low margins, high R&D costs, spinning up factories, to selling software. And software is much higher margins. The other thing that's insanely high margin for them is the fucking Mario movie. Like, these things are going to... they're going to improve their profitability at a time where, yes, hardware margins are under pressure at every company because of the AI bubble. And boy howdy will I get to the AI bubble before the end of this show. But I do find it really interesting that where Nintendo is right now in the cycle of the Nintendo Switch 2. We're talking about the best-selling video game console in its first 9 months, first 209 days. It's the best-selling console of all time. And you have Mario Kart World that has sold a gajillion units already. Right? I'd have to... Sorry, I don't think that's a real number. Is a gajillion a real number? My bad. If it's not, please understand. But let me get you the actual number. So as of right now, they've sold 17.37 million Switch 2 units. And Mario Kart World has sold 14 million units. And all these jaboofers on social media talk about how that Nintendo doesn't have a killer app for this system. It's fucking Mario Kart World. And all those jaboofers are like, it's not going to sell at 8. It's fucking Mario Kart World. It's sold 14 million units. Like, that's a lot. It's insanely close to a 1-to-1 attachment. But anyway, like, my point is, you would think Nintendo has software coming. And we got news today that Pokemon Champions is coming out on both Nintendo Switch and Nintendo Switch 2 and mobile. But, you know, Nintendo only owns 30% of the Pokemon company. But they do publish their games. And that Winds and Waves is coming out in 2027. So a lot of people are disappointed, oh, it's not going to be in the fiscal year. And there's admittedly a gap in Nintendo's release date schedule right now. What is their fall game? That is a fair question to ask right now. But do you think we're not going to get a single Nintendo game announcement between now and the end of the year? Or do you think they're just kind of focused on the Mario movie right now? Because that comes out April 1st. Which means we are now a month away from the Mario movie launching. And I would point out what Shaq News wrote about way back when. The Mario movie effect. Trademark Asif Khan. No, but like the Mario movie effect is real. Let me see if I can find that. Yeah. There it is. The Mario movie impacted Q1 earnings results. I think Sam Chandler wrote this. In their press release, this was Q1 2024, fiscal 2024. So that's the summer of 2025. Or no, sorry. Summer 23. Because the Mario movie came out in 2023. That's right. This was August 2023 is when Sam wrote this. In the press release, they said, the April release of the Super Mario Bros. Movie positively impacted the sales of Mario-related titles, with Mario Kart 8 Deluxe, a Wii U game, selling 1.67 million units on the Switch. Other titles continue to sell steadily as a result of these factors. Hardware unit sales increased 13.9% year on year. And software unit sales increased 26% year on year. So if you're wondering what the impact of the Mario movie was, there you have it. In that first quarter after the Mario movie, It was a 13% year-on-year increase in hardware sales and a 26% year-on-year increase in software sales. It's important to note, though, that the Switch was coming off of 2022, which was year 5. This was year 6 of the Nintendo Switch. There are plenty of Mario games already there. So the question is, what's the game that they're going to be buying? Is it Yoshi and the Mystery Book? Is that going to be the game that kids want to buy because of the Mario movie? Is it Mario Tennis? Is it this new Super Mario Bros. Wonder Switch 2 edition and Meet Up at Bella Bell Park DLC? Is it, what is that? What will the Mario movie impact be this time? We don't know, right? But we know from the past that it has happened before. It stands to reason that it will happen again. And oh, by the way, they made a ton of money off of the Super Mario Brothers movie itself. And now that, I'd say, Greg, you were just at Toy Fair. There's a ton of toys and merch coming around Yoshi, around Toad, around Rosalina, around Mario and Peach, and all those characters. There's a lot of Mario merch coming. And I think I might have even embedded, I think I did, in one of those articles I embedded the Yoshi. Yeah, here it is. Yeah, I'll put it up.
Yoshi.
Oh no, it was different. This is a clip from our podcast. But yeah, we have an unboxing, or not an unboxing. We have a demo video of the Yoshi egg, which is like a Hatchimal version of the Yoshi egg. But yeah, I think that there's catalysts ahead. So yeah, I find the setup to be very interesting on the chart, because for a while we've been waiting for a catalyst. We're just waiting. Now we have a share buyback, right? Like that's real. We know there is a share buyback happening. We know that's going to impact earnings per share. We know that Nintendo doesn't do this very often, right? So now we have that outside week. I keep pointing to it. So just watch this level. But yeah, this is the end of the month. It was a bad month. We're coming off of 4 consecutive down months for Nintendo. We had, I don't know if you guys remember, this was all the way back in October. I pointed out that there was a potential rev strat to the upside in Nintendo. It failed. It broke down below that, and then it sold off 3 consecutive months. So, because you had an inside month, it tried to get back inside of it after breaking down below, went back inside, and then crashed. And yeah, Greg, you asked earlier, what caused this sell-off in Nintendo? Several things. Fears about RAM prices, fears about AI, fears that they don't have any games, and like a legit thing that happened. The United States consumer struggled in the Christmas quarter. They just did. People were not buying as much stuff. They didn't have the money. The government shutdown impacted consumption too. So people didn't buy a whole lot of stuff over Christmas. And I would say that Metroid Prime 4 Beyond underperformed, I think, internal expectations and my own expectations. It was not a million seller on either platform in December. But it's important to note that was only like 27 days of sales. So next quarter, it might be a million seller. But yeah, Metroid Prime 4, after all the hype, did not really land the way people thought it would. So I'd say that's another disappointment from their actual results. But there was a lot of talk that, Nintendo didn't have a good Christmas quarter. It had a great Christmas quarter in Japan. The problem is the Japanese Switch 2 costs less than the American Switch 2. So the margins on the Japanese Switch 2 are actually lower. So their profits were worse than expected, even if their hardware sales beat. So it's a very weird push and pull going on in their numbers right now. But what I find interesting is like everyone's focused on the hardware. Everyone's staring at the hardware right now. But the real story for the next year, 2, and 3 will be software, because they already have 19 million or 17 million units out there, right? And they'll probably have 20 million units by June. They can now sell software onto that, and the software has much higher margins. And they're having this secular shift away from packaged goods towards digital sales. 50-50 right now. 50% of their software sales are digital, and 50% of their software sales are physical. And the margins on the digital software sales is closer to like 60 to 80% versus 40-30% on physical media. And physical media has other issues because now the RAM, the chips that are used in their cartridges are going up in price, right? Like all these things will impact them. So we're going to have to pay attention to their May earnings release, because that's when they provide their full year guidance for the first time. So we're going to hear how many units of Switch 2 do they think they're going to sell for the year? What are their earnings going to be? What are their revenues going to be? How much software do they think they're going to sell? And then you gotta pay very close attention. You gotta pay very close attention to the software lineup. Because like I said, if Pokemon Winds and Waves, which was just announced today, is not coming out until 2027, what's coming out this year? We don't know right now. But I doubt it's nothing. I doubt Nintendo's just like, yeah, we'll just not release anything. You know, like, one thing you got to give them credit for, they've had a really good cadence of releases in the Switch 2 launch period, but even during the Switch era. They may not all be bangers, but like you had Kirby Air Riders, which did better than expected for a lot of people. Kirby Air Riders has sold 1.76 million units as of December 31st. Pokemon Legends ZA for Nintendo Switch 2 has sold 3.89 million units. That will probably continue to sell. Donkey Kong Bonanza has sold over 4 million units. So it's like those games, as the hardware continues to get out there, more people are going to buy the software. That's what happens every generation with them. And to your point earlier about the attach rate of Mario Kart, I think that means Mario Kart will continue to sell. So, but yeah, they need more games. That's just a fact. But yeah, that's the Nintendo news. Let's look at the time frame continuity. It's down on the year. And it's not even trading inside year. So the stock has not found equilibrium on the yearly chart. That's bad. The low of last year was 1394, which we're back inside, by the way. On the quarterly chart, not inside. And you still have 1 month left in the quarter. March. On the monthly chart, I already showed you this. It's been unable to find equilibrium since September. And we saw it broke equilibrium to the downside. And when it broke, boy howdy did it break. When it broke that downtrend, it puked hard. But we are real close to the bottom of this broadening formation. That's why I've been so aggressive in buying shares. Oh, sorry, I haven't been looking at the chart. But yeah, on the yearly chart, not inside. Quarterly chart, not inside. Still a month left. Monthly chart, we already looked at this one. But look how close it is to this uptrend. And this is the uptrend it bounced off of right before the Mario movie launched last time. It's the one it bounced off of in 2019, before it went on that crazy run it had during the lockdown. And then it sold off from the lockdown all the way down to the bottom in 2023. And then it ran all the way from 2023 up to the top here in 2025. And now it's selling off at a pace I've never seen it sell off before. The pace that it's selling off is illogical, and I think it's founded in a lot of fear, uncertainty, and doubt. And the problems that Nintendo faces, everyone faces. But what's different is they are definitely Tony Stark in a cave with a box of spare parts when it comes to how they make hardware. Their hardware is the least expensive to make out of the competitors right now. So if you're worried about Nintendo, worry about Xbox, worry about Steam Deck, worry about Sony, PlayStation 5, 5 Pro, and 6. But yeah, before the monthly chart can bottom, before the weekly chart can even bottom, the daily chart had to bottom. And the daily chart bottomed on February 5th when the shares traded 8.5 million in a day. And that was the day that everything was selling off. Every single thing was selling off. And that was the Google's agent. What was that? What's that thing called? I can't even remember the name of it. That world building thing. Was it Google's open world generator? What's that thing called? Genie. Google Genie 3. You remember they dropped that video and everyone's like, "Oh, sell your Nintendo, sell your Take-Two Interactive, sell your Unity stock." And I mean, some of those stocks really did sell off and they haven't recovered. Unity is in a lot of shit right now. But yeah, so before the weekly chart could bottom, the daily chart bottom. But then we went inside week, outside week. So now the question is, do we get outside of this big ass bar that was in February, the first week of February? Because if we do, you can get back above 16.38 a share. And that would be interesting. Because we're down here at 14. Anyway. Any other questions about Nintendo before I move on? I thought I would definitely focus on Nintendo this episode. But yeah, I explained the buyback and the fundamental part of that. Explained what the chart setup looks like. So just as a reminder, it's a buy above 1444 if you're just going to trade it on the weekly chart. It's a sell below 1363 if you want to short it. God help you. I would not be shorting it here. What are the odds they drop a big first party game this year? I don't know. I have no idea, man. A big first party game, like, I don't know. Seems like they would. Like, why not? I don't know. It's hard to say, man. That's what's frustrating for people who don't, like, people who want predictable cash flows. Nintendo's very frustrating because they don't tell you anything. I agree. I'm on record that I think Super Mario Galaxy 3 is a no-brainer. Like, that to me is the obvious play. Is you drop the Super Mario Galaxy movie, and at the end of the movie, you drop a trailer for the game. Super Mario Galaxy 3 coming this fall. And everyone's like, "Oh my god, stay to the end credits," you know? Like, I can just see that, you know? So if I could have my wish come true, Greg, that would be it. That they have some kind of a 3D Mario title in the chamber here. And that Donkey Kong Bonanza really was a Switch 1 game that ended up just kind of slipping into the Switch 2 generation. You know? Because they were working on that for a while. And they have scaled up their development teams in Kyoto. So it's possible that they have two teams working on two different games. And just imagine what they could do with the Galaxy franchise with this Switch 2 hardware. Mario Galaxy and Mario Galaxy 2 are considered some of the best 3D platformers of all time. And they're on a Wii. Like, they're on the Wii. Imagine what they could do with that universe, that style of game, with a new, powerful console. Yeah, I would love to see that. So yeah, I think there's... I'm of two thoughts here. On the one hand, if they don't have a 3D Mario ready, the thing that seems obvious to me, because by the end of this year, by the fall of this year, let's say by November of this year, we're going to be very close to the Zelda movie. And I don't think we're getting... Oh, I think the Tears of the Kingdom Breath of the Wild story arc is done. Right? Like, that story is done. We're not getting a third game in that That's not a trilogy. Those were 2 games. It's over. But what if you were to take the best Zelda game according to Metacritic and you remade it in the Breath of the Wild Tears of the Kingdom engine at 4K, 60 FPS, and you released Ocarina of Time 4K remake this fall? Is that not one of the games that could go head to head with a Grand Theft Auto? It's different enough. And Zelda fans you would buy that so fast. And by the way, make a Zelda Switch 2 while you're at it. I think there's a lot of people who would be buying Ocarina of Time. I would buy both games because I cannot wait to play GTA 6. I'm very much looking forward to GTA 6. I'm not shitting on it at all. I'm just saying that there's not many games that you can go head to head with GTA. Zelda Ocarina of Time is one of those. Really is. It's like Ocarina of Time remake ahead of the Zelda movie in May of 2017. I keep saying 17. We're in the 2020s. May of 2027. Doesn't that just seem like it would fit? Doesn't that just seem right? Like, even if we don't get a Mario game this year, like the Mario 3D game is not coming this year, I think Ocarina of Time might be real good. Might be that perfect thing to slide in here. You know? So yeah, I'll say that. That's the one. I have just before we move on from Nintendo, I don't normally talk about my IRA very much, like my personal. I have a Roth IRA. I manage my own Roth IRA. It's not as big as my largest portfolio that I manage. When I talk about the largest portfolio I manage, it's much larger. But I've had a lot of success in a stock like Tesla. I bought Tesla right around here. January of 2012. Summer of 2012. At $1.77 a share. A few weeks ago, oddly enough, it's not that I've been tolerating Elon Musk. I've just kind of been like, I don't know what to do. This guy's an idiot. I felt like he's holding my money hostage. I was looking at my IRA, and it was 80% Tesla. 80% of my money was in Tesla. So I dumped about 60% of it. At around $416 a share, I dumped 60% of my Tesla holdings. So now it's down to about 30% of my portfolio. I kept some shares around for idiot insurance, or also just for evil Mecha Hitler insurance. But I turned around and I put all that money in Nintendo. Below $14 a share. So now Nintendo is the largest holding in my retirement account. I have 43% of my retirement money in Nintendo. So that's the last thing I just wanted to add. I have put my retirement into Nintendo pretty heavily. And it's mainly because I simply don't trust Elon Musk. I think that that quarter was awful. And what lies ahead for Tesla is a road of just pain. I don't think their robo-taxis are going to be ready. You look at what's going on in Austin. They only have 10. When it rains hard, they won't actually operate. You can't hail a robo-taxi when it's raining hard because these things use camera technology. They don't use LiDAR. So it's not able to detect things in 3D when the cameras are covered in water. And this is something I've been saying for a really long time. And I know they design these cars in California and they have a factory in Texas, but like a lot of people live where there's inclement weather. And if these things can't, like the idea that they're going to build cars without steering wheels, no. So I dumped 60% of my Tesla holdings and I put it all in Nintendo. I'm still like I may do more, but I kind of look at it like, you know, I've been in this stock for a real long time. I was in it before Elon Musk pivoted to being a white supremacist and all this MAGA nonsense. But also like he's just stupid. He's just saying really stupid things. Obviously he's also on the Epstein files. Christmas morning, that man was emailing a pedophile about when the biggest party of the weekend would be. Christmas morning, emailing a pedophile. That's the nice thing about Nintendo. I don't have to worry about Shuntaro Furukawa emailing a pedophile or even tweeting anything. He doesn't have a Twitter account. If he tweets from the Nintendo account. So yeah, not financial advice, but I did dump 60% of my retirement account's holdings in Tesla. And I think there are a tremendous amount of risks at that company right now. I don't think their robotaxi full self-driving program is going to work. I think that the ramp in Optimus is going to destroy their margins. And yeah, I'm an early adopter, and I'm the one who bought the Model S, and I drive a Model X. My daily driver is a Model X, and they're discontinuing both of those cars so that they can build these robots. But if you're a luxury brand, this is like if Mercedes got rid of the S-Class, or if BMW got rid of the 7 Series. You're not a luxury brand if you don't have a flagship sedan. So what the fuck is Tesla now? It's a robot company. It's an unproven robo-taxi company. It's a full self-driving company. It's a shitty AI company. And their CEO sucks. And cars are brands. Cars are so much brand. Brand is so important when it comes to a car. And Elon has tanked the value of the Tesla brand. So yeah, just an update on my Tesla position and also my Nintendo. My personal Nintendo holdings are up materially because I did dump Tesla. And I think this thing can go way lower. I'm talking like $200 a share. And it's currently at 401. So yeah, not a fan. Speaking of stock that I already dumped, hallelujah. Hey, guess what's down since I sold it? Nvidia. But could I interest you in an outside month? Yeah, but that lithium, yeah, you know, it's, you know, TJ brings up, it's a lithium refinery and battery company. The lithium refinery is polluting the water in the place where it is, and the batteries are, yeah, they're definitely something, but they're way lower margin than their cars were. And their cars weren't even that high margin. They peaked. Their margins have peaked at Tesla for at least a year. It was like 20%. And now you have decreasing revenue in almost every geography. And because this dumbass, because Elon Musk and his dumbass got Donald Trump elected, he lost the $7,500 tax credit for his vehicles. So every single one of his vehicles is less affordable than it was last year. Because of his glorious leader fucking him over with the big beautiful bill. And like on the conference call, he wouldn't shut up about political unrest, potential geopolitical risk. He kept talking about that. But yeah, Tesla is a refinery. Tesla is a battery company. Tesla might even be a robot company someday. But all of those things are lower margin than the fucking Model Y and the Model 3 a few years ago. He is a loose cannon, and I don't think he He's always late. Sometimes he's right with his predictions about Tesla shipping something. Sometimes he's not. Sometimes he's just full of shit. Like, let's say he's right, and eventually they'll be able to spin up their robot capacity to 1 million robots a year. Would you buy a Tesla robot and keep it in your house? Like, I wouldn't. Fuck no. So, like, who's going to buy these million robots? And, like, what companies are going to already have better robots than him? The other thing is, China is eating Tesla's lunch internationally. And Rivian is coming for them in the States. And Ford is coming back. Ford's coming back with another EV effort. And Rivian is a brand that I think has a chance. I'm rooting for him. But yeah, back to NVIDIA. Outside month. We have an outside month in NVIDIA. This is very interesting, folks. This is very, very interesting. This might be the most strat chart. I wish Rob was still alive to see this chart. This is a inside month. So you had that big, you remember when we dumped NVIDIA stock, TJ, the stock went from 211 down to 169 in November after their earnings report, after that OpenAI, hey, we might not invest $100 billion. That news came out. It traded inside month. It tried to go back up. So that range was 211.34 per share down to 169.55 per share. That was the range in November 2025. December, the stock hit a low of 170.31 and a high of 192.69, trading inside of November's range. But then it tried to get back above that range. It got to 194.49, only to close the month of January at 191.13, inside of that December range. That sets up what is called a reversal strategy. So you would have a sell signal below the low of January, which is 177.61 per share. Well, guess what happened today? It dropped below that. It hit a low today of 176.38. Let's go back to that monthly chart. We now have an outside month. You have a rev strat still with an outside month. So it would be a buy above 197.63 per share, and a sell below 171.03 per share. Pretty interesting. Pretty interesting, if you ask me. So let me see if I can find the.
Well, small.
Thought this was an interesting one. I'm gonna play a couple of clips from their conference call for the folks at home. So here's one CFO talking about China revenue.
Small amounts of H200 products for China-based customers were approved by the U.S. government. We have yet to generate any revenue, and we do not know whether any imports will be allowed into China. Our competitors in China, bolstered by recent IPOs, are making progress and have the potential to disrupt the structure of the global AI industry over the long term. To sustain its leadership position in AI compute, America must engage every developer and be the platform for choice for every commercial business, including those in China. We will continue to engage with the US and China governments and advocate for America's ability to compete around the world.
You can see in the video the stock chart was just dropping as she said that, right? So I thought that was pretty interesting. I'm gonna play a couple more clips because I think that this was this is why you got to watch. This is why you gotta hit the follow button here at Shack News and keep yeah.
We shipped our first.
Yeah, this Vera Rubin thing. They're talking about shipping Vera Rubin. We'll get to the OpenAI thing. Here we go. This is where the CEO really, the Shack staff. We were listening to this in our Discord together. This is where we are all just like shaking our head, and I'm gonna play this for you. This is the CEO Jensen Huang talking about the correlation of compute to their financial results.
Compute is revenues.
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 Compute is revenues. Without compute, there's no way to generate tokens. Without tokens, there's no way to grow revenues. So in this new world of AI, compute equals revenues. And I am certain that at this point, with the productive use of Codex and Claude Code and the excitement around Claude Cowork and just the incredible enthusiasm about OpenClaw and the enterprise versions of them. All of the enterprise ISVs who are now working on agentic systems on top of their tools platforms. I am certain at this point that we are at the inflection point. We've reached the inflection point, and we're generating profitable tokens that are productive for customers and profitable for the cloud service providers.
Profitable for the cloud service providers. We listened to all the conference calls for the cloud service providers, and not one of them said that generation of AI tokens was profitable for them. Jensen's talking out of his ass there. Obviously. Compute is revenues.
Compute is revenues. It's very important. It's really important to realize that inference equals revenues now for our customers. It's very important. It's really important to realize that inference equals revenues now for our customers. Because agents are generating so many tokens and the results are so effective, when the agents are coding, it's off generating thousands, tens of thousands, hundreds of thousands, because they're running for, minutes to hours. And so these systems, these agentic systems, are spawning off different agents working as a team. The number of tokens that are being generated is really, really gone exponential. And so we need to inference at a much higher speed. And when you're inferencing at a much higher speed, and each one of those tokens are dollarized, it directly translates into revenues. And so inference performance equals revenues.
So if you were to do like a NVIDIA conference call drinking game, and you drank every time he said inference, every time he said compute, every time he said tokens, and every time he said agentic AI or agents, you would need your stomach pumped within 10 minutes. It was insane how often he was talking about that stuff. But then, this is when I think we were certain that the bubble was... I think the bubble might be bursting, guys. This was the moment. TJ, are you glad you don't own the stock anymore?
GPUs in space, Asif, solving real problems. That's what we're doing here.
When he said that, I was just like, GPUs in space! Yeah, sorry, this is... And we were talking... Sorry.
There are many different...
Here we go.
computing problems that really wants to be done in space. And so NVIDIA is already the world's first GPU in space, Hopper's in space. And one of the best use cases of GPUs in space is imaging, to be able to image at extremely high resolutions using optics and artificial intelligence, and to be able to do that computation of reprojection of different angles, and be able to up-res and do noise reduction, and just be able to image at very high resolutions, extremely large scales, and very, very fast. It's hard to do that by sending petabytes and petabytes of imaging data back here on Earth and doing that work. It's easier just to do it out in space.
So that was where we reached the conclusion. We're at the GPU. We're at the bragging about GPUs being in space part of this bubble, and it just leads me to my point that I think NVIDIA is high on its own supply, man, and you got an outside month to the downside here. So, you have an outside month. So the downside would be below 171.03. And the upside, you would be buying it above last month's high of 197.63. My whole thing is this. NVIDIA hit an all-time high valuation for any company in the history of the world of over $5 trillion. When you hit $5 trillion in market capitalization, who's the greater fool? Who's going to be the next person to buy your stock to make it go higher? And what's going to justify it? If their revenue growing at 77% year over year wasn't good enough, or 60% growth year over year wasn't good enough, 70% margins isn't good enough, what does that say? It says that this is already priced into the stock. The growth is priced in. It's not that NVIDIA is a bad company. I mean, I don't necessarily like them, but I'm saying it's not like they're going to run out of money or anything. They're not. They're wildly profitable. But I think this AI bubble is real close to bursting. The cracks are starting to show. Big time. It's not necessarily at NVIDIA. But why is this stock down so much? It's interesting, right? Why is the stock down? Why would the stock go down today? I don't know. I think Shack News might have reported on something about this. Why would NVIDIA stock go down today? Oh, they bought $30 billion of OpenAI at a $730 billion valuation. This ghoul, Sam Altman. Interesting. SoftBank, NVIDIA, and Amazon buying this. But it's important to note, this $30 billion is 70% less than that press release from September of last year, where it was going to be $100 billion. What happened? And how the fuck is OpenAI committing to spending over $1 trillion between now and 2030? How are they going to afford that? If they only just got 110 billion only. It's insane. This is insane. How is a private company that isn't profitable valued at $730 billion? How do I know we're in a bubble? Because of this fucking company. It's not that I think AI is... I want to make this abundantly clear. It's not that I think all AI will fail and that AI isn't some revolutionary technology. Parts of AI are revolutionary. Parts of AI will be truly disruptive. Parts of AI are even useful. But it's the generative AI and the large language models that I think are completely overvalued. It's completely overvalued right now. We're valuing things on tokens. Oh, tokens and agents and tokens and agents. In 2000, we were talking about eyeballs on websites, and we were valuing websites based on eyeballs. And they never figured out how to properly monetize the eyeballs. And all of those internet companies in the 2000s, most of them failed. Google came up after the dot-com bubble crash. People forget that. Google rose. The IPO of Google was in the year 2004. The stock market bubble burst in the year 2000 and bottomed in the year 2003. And you had AltaVista die. You had Hotbot and Lycos and Yahoo, all of them crumbling into each other. Metacrawler. Like, think about Ask Jeeves. Think about all these websites that were the shit in the year 2000. AOL fucking bought Time Warner. And now it's not even a thing. But no one wants to understand the correlate. Like, it's not that history repeats itself. It's that it rhymes. And OpenAI, man, it feels like one of those stocks it's not even a stock. This is a private company valued at $730 billion. For what? But if they're committing to $1 trillion of infrastructure spend between now and whenever, and they need more compute to get to this revenue goal, when do they break even? How do I know we're in a bubble? This valuation is how I know. It's insane. This makes no sense. I look at like what we could have as a society. And like what we're doing instead with the money. And it's just frustrating. It's just frustrating. I'm going to probably wrap up the show here relatively soon. I'm tired, guys. This was a very long week and a long day. But I have one other story I want to talk about before I go. I'm also just gonna. What I'm gonna do is I'm gonna order my dinner, and then once it's close, we'll end the show. I think that's how I'm gonna play this. This seems like a move, right? But yeah, let me queue up this story, because this is the one. Last night, before I reported on the Nintendo news, this was the story that I actually ran into the Shack newsroom to report, because I was like, this is fucking scary. And it's AI related. No, I didn't mean to do that. Okay. Here we go. Sorry, I'm just out here picking my food. Okay, there we go. Here's the headline. Google and OpenAI employees join Anthropic's call for limitations of government and military AI use. Employees at Google and OpenAI have issued a statement on the website notdivided.org. It's an open letter. It starts with, "We will not be divided. The Department of War is threatening to invoke the Defense Production Act to enforce Anthropic to serve their model to the military and tailor its model to military needs. And they're threatening to label the company a supply chain risk if they don't do it." This is stuff that they label foreign companies and like nations that we don't have good relationships. These are things that they would do that with. And the Defense Production Act is not something that you invoke for this kind of reason. This is all, they said, all in retaliation for Anthropic sticking to their red lines to not allow their models to be used for domestic mass surveillance and autonomously killing people without human oversight. That's it. Anthropic's like, we don't want you to use our technology for mass surveillance in the United States and for autonomously killing people with no oversight, no human oversight. The Pentagon is negotiating with Google and OpenAI to try to get them to agree to what Anthropic has refused. They're trying to divide each company with fear that the other will give in. That strategy only works if none of us know where the others stand. This letter serves to create shared understanding and solidarity in the face of this pressure from the Department of War. We are the employees of Google and OpenAI, two of the top AI companies in the world. We hope our leaders will put aside their differences and stand together to continue to refuse the Department of War's current demands for permission to use our models for domestic mass surveillance and autonomously killing people without human oversight. This was in response to a statement issued by Anthropic CEO Dario Amati, who said this is him refusing to do exactly what the Department of War had requested. He said, the Department of War has stated they will only contract with AI companies who accede to any lawful use and remove safeguards in the cases mentioned above. They have threatened to remove us from their systems if we maintain these safeguards. They've also threatened to designate us a supply chain risk, a label used for U.S. adversaries never before applied to an American company, and to invoke the Defense Production Act to force safeguard removal. These latter two threats are inherently contradictory. One labels us a security risk, and the other labels Claude as essential to national security. Regardless, these threats do not change our position. We cannot in good conscience accede to their request. And then Jaboufer Jones at the Undersecretary of War, Emil Michael, said, it's a shame that... I'm not even going to read it. You can read it yourself. Said some bullshit. This is crazy. And I believe Sam Altman actually made a statement on this today. And him and Dario hate each other. Like they're not friends at all. Let me see if I can find that video. Yeah, here's... I'll pull this up. Here's this there was this moment, there was an AI summit in India. This was last week. And all the different companies, like all the different execs were holding hands. And Dario and Sam Altman refused to hold hands. They're just holding their hands up next to each other. So this was just a week ago. They were not expressing solidarity. They kind of hate each other. Right? Flash forward to today. OpenAI, the government is willing to let OpenAI build their own safety stack. So this is breaking this afternoon. Sharon Goldman over at Fortune is reporting. Sam Altman told employees at an all-hands meeting on Friday afternoon that a potential agreement is emerging with the Department of War to use the startup's AI models and tools, according to his source present at the meeting and a summary of the meeting seen by Fortune. Contract has not yet been signed. The meeting came at the end of the week where, the whole Anthropic thing. Altman said the government is willing to let OpenAI build their own safety stack, that is, the layered system of technical policy and human controls that sit between a powerful AI model and real-world use, and that if the model refuses to do a task, then the government would not force OpenAI to make it do that task. So Altman is standing, oddly enough, in solidarity with Dario, which is not normal. They hate each other, as I just showed. Let me see if I can find this video. Here it is.
I don't personally think the Pentagon should be threatening DPA against these companies. For all the differences I have with Anthropic, I mostly trust them as a company, and I think they really do care about safety, and I've been happy that they've been supporting our warfighters. I don't.
So this was earlier in the day that he did seem to take the letter from his employees seriously. But yeah, it's a lot of money. It's a government contract. That's the kind of thing that a $730 billion company needs to get anywhere near profitability. But yeah, this is where we're at, man. This is where we're at. We're at the GPUs in space part of this bubble, and we're at the autonomous killing machine part of this AI bubble. So yeah. Is there any other... What else should we talk about? Everything else seems kind of trivial. I was kind of focused on these two things. It's just funny. I had this whole thing planned. I'll just save it for next episode, honestly. I've been doing a lot of research. These episodes the fact that I'm able to have a stream of consciousness with you folks at home for like over an hour about these topics, it's because I sit and I read about them a lot at home at night after work. And I have made a trade where I was short the market for a little bit. And we do have that Rev Strat month that did go into effect for a bit. There was an opportunity to short the Qs. So I want to point that out. Here it is on the chart. You had it out, you had a inside month, went above it, back inside of it, and then we dipped below it. So the low of January was 607 and 5 cents. We broke below that multiple times in February, and you had opportunities to make like short-term trades. They weren't long-term. You had to be very quick. I made one trade this month where I was short the Qs, and it was like for maybe an hour. I wasn't short the Qs for very long. I was using put options to do it. I bought the 600 put expiring like in March, probably the middle of March. So yeah, now it's more just watch where it goes from here kind of thing. It's still inside quarter, and that's why it was very difficult to trade. You had to be kind of quick, but there were multiple times. I guess we should look at the volatility index before we go. There were multiple times this month where the volatility index spiked. Trump's like trying to distract people. He's like, hey, we're going to go to war with Iran. Hey, the tariffs. Hey, this. I'm going to put more tariffs with blackjack and hookers. I'm going to do this. By the way, I'm in the Epstein files. But no, I'm not. The Epstein files are a hoax. He's volatility incarnate. And you see it in the volatility index. The volatility index is in a slight uptrend here. I think it's safe to say. It may have bottomed in late December, which is normal. That's a seasonal time for it to bottom. But yeah, sitting here at 1986, you had a inside week, failed rev strat, followed by an inside week, followed by a failed breakout to the upside. It's a chop shop. It's not really, there's no real direction. And that's, oddly enough, that's why it looks like this. This is called a doji on the candlesticks. It means you open and close right where you were. But in between, there was a lot of movement. The volatility index went as low as 1605 and as high as 2310 during the month. But it's opened at 1986. Opened at 1995 and it closed at 1986. It's only 9-cent movement. If you just closed your eyes and you woke up a month later, the VIX didn't move at all. But if you were there, it was all over the place. And that's why you look at the weekly chart. That's why you look at the daily chart. And yeah, on the daily chart, I am seeing a uptrend forming here. So maybe that's, yeah, that's troubling. Just so you know, if you want frames of reference for like how high can the VIX go, in the year 2020, during the lockdown and the panic of March of 2020, we hit a high of 85, not 47. In the panic of the financial crisis in 2008, when the TARP bailout occurred, we hit a high of 89.53 on the VIX. And the day of not the great crash, but the crash in 1987, Black Monday in October of 1987, the volatility index hit 172 and 79. So those are the three all-time high. Like, those are the three highest readings in the volatility index, all correlated to massive crashes or financial crises or panics. Volatility is really a measurement of fear. They call it the fear index. But it's also a measurement of panic. And I think going into the fall, people should be paying attention to the volatility index. But also, it determines the price of put options or call options on the S&P 500. So the S&P 500 did not trade outside month. It's kind of just been a chop shop too. It's going to be the inverse of the VIX in a lot of ways. Next month's going to be interesting because we'll have the quarterly charts to look at. Right now, I don't have a lot of signals for people outside of that one in Nintendo I pointed out and the one in Nvidia, oddly enough. Which, hey, those are the two stocks I kind of pointed out in my thumbnail today. So I'm going to pat myself on the back for that. Way to go, Asif. But yeah, to remind people, you have an outside bar on the monthly chart in Nvidia. So if it breaks out to the downside or the upside, you have an all clear to you would. So if you want to like understand how you trade these, you would sell or buy put options right below 171.03 in Nvidia, or you would buy call options or buy the stock above 197.63 per share. And those would be your stops. So if it goes back within that range, you get out because you no longer have that signal. But that's how I would trade it. And then yeah, the inverse. Nintendo's not on the monthly chart. Nintendo's just next week. But it's like I said, for a stock to stop going down on every time frame, it needs to stop going down on at least one. And I think we might finally have it at Nintendo. So Nintendo next week is a buy above 1444 and a sell below 1363. Now, I'm of the opinion that we're not going to go below 1363. But we'll see. We don't know. I'm not here to predict anything. You'll notice I'm never telling you what I think's going to happen. I'm telling you what to do if something happens. If this happens, then do this. If this happens, then do this. But there's three possible outcomes. It can go up, it could go down, it could stay inside. Tune in next week to find out. But those are the price levels to pay attention to in both of those stocks. But yeah, before I go, Mark Zuckerberg, you're on notice. Meta is the shittiest tech company, by far. They suck. You know who the Department of War isn't talking to about using their AI? Meta. They don't need it. Meta's AI sucks. Meta's AI sucks. Meta's hardware sucks. Meta is bad at almost everything except for monetizing what you've already told them, what you like. They're good at monetizing Instagram. They're good at monetizing Facebook. They're good at monetizing WhatsApp. They are god-awful at making hardware. They're so bad at making hardware that they've had to do a deal with AMD and Google. They're buying Google's TPUs and AMD's GPUs to train their shitty AI, which they've now had to reboot for the second time. This company is trading inside month. in February. So you would have this is interesting. You have an outside month followed by an inside month. This would be a sell below 628 and 15 cents per share. It would be a buy above 721 and 30 cents per share. And I'll be honest with you folks at home. I've been looking for a way to hedge my exposure. Being long Nintendo, being long anything. I really want to short Meta. I think it's the short. They're worse than Amazon. They're worse than Google. They're worse than Anthropic. They're worse than OpenAI. They're worse than Microsoft. They're worse than Apple. Outside of advertising, what is it that Meta is good at? I'll wait. But yeah, if I'm going to chop wood, it's here. This is where I'm looking to chop wood. This is the weakest link. Tesla, honestly, might also be a weak link. Honestly. Tesla's got a lot of problems. But Meta, I'm not going to get into it this week because it's a very, very, very long and detailed breakdown of the financial statements. So I'm going to save it for next month. I will save it for next month. Because what I think is weird about this whole thing is, like, as much as it feels like the bubble is bursting, look at the S&P 500. It hit an all-time high in January. Right? You look at the Dow Jones. Of course, I don't have the Dow Jones on here because no one gives a fuck about the Dow Jones. The Dow Jones hit an all-time high in February. And Pam Bondi even said it at the Epstein hearings. The Dow is above 50,000, and then it went below 50,000 literally the next day. Monkey paw curled. But yeah, you have like the Dow at an all-time high. You have the NASDAQ really kind of in mud. The NASDAQ's the one that did not hit an all-time high. But as much as it feels like they're not doing great, we haven't really seen the broader markets roll over yet entirely. We haven't seen like a liquidation. Because I think it's like a best house in a terrible neighborhood kind of situation. It's like, where are you supposed to put your money right now? Would you buy U.S. Treasuries? Would you put it in the bank? Savings rates suck. Municipal bonds? Crypto? Gold? Oh, that's right. Gold. Let's put it in gold. What am I talking about? Just put it in gold. We should all just invest in gold. Are you a druid? Do you accept gold as a currency? Look at that chart. Gold, inside month. Gold would be a buy above 486 on GLD's ETF and a sell below 396 and 25 cents. Don't want to buy gold? How about silver? Inside month in silver. Hit an all-time high last month. A buy above 85.27 and a sell below 65.14. There you go. Buy things where if you drop it on your foot, it'll hurt. And before we go, because I'm hungry, I want to talk about Wendy's. This company's in trouble. They are shutting down stores. We're talking, like, look at this chart. This is a bad chart. This is the lowest it's traded since the lockdowns. It hit an all-time high. I believe it was all-time. Yeah, hit an all-time high of 29.46 in June of 2021. It's trading for $7.70. Hit a low this month of $6.73. I'm not saying to buy Wendy's. I'm not. I'm saying that I think they might actually go bankrupt or have to be restructured. They're already shutting down stores. They're already laying people off. They're trying AI and in their drive-thrus. They're experimenting with all sorts of shit. Dave Thomas would be rolling in his grave. Or he is rolling in his grave. But man, those Frosties are good. I'm hungry. I'm also very tired. But yeah, rough chuckles over there at Wendy's. Now that Denny's is no longer publicly traded, I have to find a new turd in the quick service industry to talk about. So it'll be Wendy's. That'll do it. I think I'm gonna head out, guys. But appreciate you guys watching. Before I go, since I've been talking about a bubble so much, what if I fire up Bubbletron and give it a little spin before we go? So this is our free-to-play video game. It's a browser-based game that we created. It's called Bubbletron. It's a daily reset sarcastic stock market almanac. Easy for me to say. But yeah, it's also got a little doggy here in the corner. Let's see. You basically combine 3 ideas, and then you see if you can hit the high valuation of the day or the low valuation of the day. So let's see. It's also a soundboard, by the way.
Canadian Reddit comment system website. Brick and mortar glasses for socialist healthcare. Brick and mortar healthcare for socialist.
I think that's going to be the low valuation. What do you say? Should I give it a spin?
Calculating.
Brick and mortar healthcare for socialist.
I was right. How about that? Should I try to go for the high valuation? And yeah, if you get one guess right of one of the parameters, it'll show up as like a little poop emoji next to it the next time you select. Let's see. What will the high valuation be?
Brain computer interface. Vertical video. Ice harvester. Search engine. Website for streamers. Battle Royale game for the elderly or librarians.
I'm gonna go with Battle Royale game.
Brain computer interface. Vertical video. Battle Royale game.
Is vertical video the right one? I think it is. Here we go.
Calculating.
Nope.
Calculating.
Brain computer interface. Vertical video. Battle Royale game.
I got 2 of them right. Oh wow, brain computer interface was wrong? Maybe it's the singularity.
The singularity.
Calculating. Calculating.
The singularity. Vertical video. Battle Royale game.
But yeah, that's Bubbletron. Free to play at bubbletron.com. Check it out. We live in such absurd times that Bubbletron's almost not absurd enough, so we're going to crank it up before the end of next quarter, I would say. Check out Shack Pets. It's the ultimate battle for cuteness. We got the website itself, shacknews.com. Please check that out if you have a chance. This will be if you missed part of the stream, it'll be up on YouTube at Shack News YouTube. But we also have a Shack News VODs channel and an interviews channel. So check out all of those. And then, yeah, if you missed it, maybe we'll post clips to social. I don't know. I've been posting videos to social all week, and I'm kind of tired of it. So probably won't be doing that today. Oh, no. What's going on? My food has been delayed, apparently. I don't like this story. It's going to take him 20 minutes to get here. But anyway, that'll do it for the show. As always, I tell folks at home to manage your risk. Look at your positions. Look how much debt you owe. Look at what your expenses are for the month. And reassess your risk. If you're taking too much risk, take some off. If you're sitting on cash, maybe listen to some of the advice I gave you and consider some of those I shouldn't say it's advice. It's not financial advice, but listen to what I was talking about and maybe take advantage. If you're an active trader, I gave you some setups. If you're an investor, I think I gave you some things to think about. But yeah, I'm putting my money where my mouth is. I've been buying Nintendo stock, and I'm going to continue buying Nintendo stock, and I'll continue making meme videos when I do it. So thanks for watching, everybody. I'll see you next time. I muted myself too early. Bye-bye.